Hello, hello. Hope you guys are doing great. As always, I'm going to check my phone real quick and make sure that you guys can hear me, you can see me, and that this is actually working. Give me 1 second here. All right, just got the notification that we are live. Let's make sure we're gonna. Yep, we are live. So we are currently live streaming into my YouTube channel, The Profit Factor, as well as my Facebook group, The Profit Factor, and then my business page on Facebook, The Chic CFO. We will soon be streaming into LinkedIn. That is definitely the goal for first quarter of 2022. But there is like some type of validation process you have to go through with LinkedIn. It's a little bit different, but I did go ahead and apply for it. Now, if you guys are here live with me, go ahead and grant StreamYard permission so that I can see your name. StreamYard is the app that I use to go live. Yep. And if you don't give them permission, I just see Facebook user. So right now I see somebody saying, hi, Danae, thanks for doing this, but I don't know who you are because it just says Facebook user. So if you grant the app permission, I'll be able to see your name. Now, if you are watching this on the replay, go ahead and in the comments, just leave hashtag replay. The reason I'm asking you to do that is very simple. It helps the algorithm because if I've got comments, I've got engagement, and Facebook will show these videos to more of you so more of you can benefit from the information. Somebody at Facebook user, how do you do that? So it should, hey, Kayla. So it should be something when you go to post on Facebook that just says like, do you grant StreamYard permission? Now, for those of you who are new here, my name is Danae Wolf. I am a financial clarity coach and a profit strategist, which means that I help entrepreneurs like you understand the money side of your business so that you can increase your profits and decrease your stress. I go live every single week, bringing you free trainings that I hope will help you make sense of all of the sort of accounting jargon that you hear as entrepreneurs. We talk about everything from how do taxes work to how to read a profit and loss to how to budget. So today we are talking about a topic that I feel really strongly about. So we're going to talk about if you're going to owe taxes, do this, not that. I'm sure you guys know 'tis the season to talk about taxes, right? It's year-end time, which for most of you means you're just starting to think about the fact that you haven't done anything all year to prepare to file your taxes. Now, I know that this happens year after year, so don't worry. Over the next couple of weeks, I have a ton of free content that is going to help you guys get on track. But as you're now in this season where you're starting to take a look at your finances, you may be in a place where you owe taxes. Now, the first thing that I want to say to you, all right, is that profitable businesses pay taxes. So the first step of this training is for you to really just take this mindset shift and recognize that paying taxes, all right, means that you made money. People whose businesses lost money don't owe taxes. And I believe most of you probably got a sort of tough love lesson with this when it came to the PPP. So I'm going to take it way back to the beginning of COVID, probably when most of you first discovered me. When we dealt with the PPP loan, one of that early stipulations was it only went out to profitable businesses. And we encountered a lot of entrepreneurs who were like, wait, why don't I get this money? I need to replace my paycheck. Well, the problem is on paper, you've been telling the government for the last decade you don't have a paycheck. So what is there to replace? So I think it's really understanding that this entrepreneurial sort of culture that we've created is this idea that everything has to be a write-off. And I'm sure you guys have probably seen that little snippet that I've posted several times from Schitt's Creek where David Rose is saying like, it's a write-off, it's a write-off. Like everybody's heard this term, right? And I think there's a lot of confusion as to what a write-off really is. And I think there is this mindset that we want to avoid paying taxes at all costs. So I wanted to be super clear and explain when you're avoiding paying taxes, the only way to avoid paying taxes is by telling the government you didn't make any money. So you're basically on paper creating a paper trail that says you don't make any money. And that can be a slippery slope. You guys encountered issues with that during PPP. You're going to encounter issues with that if you go to purchase a home, if you go to purchase a car, because on paper, you make no money. All right. So that's the first thing. If you guys are sort of coming here to think, what can I do to evade taxes? This is not the training for you. I'm not your girl. I'm very by the book with that stuff. Like, just pay the friggin' money, death and taxes, right? Here's the thing about me, though. I don't want you to pay a penny more than what you owe. But I'm not going to be one of those, here's this loophole, here's how we can finagle and get out of paying taxes. I really look at taxes as a part of life. So here is what I want you guys to do. First of all, the very first step in preparing for owing taxes, all right, is to get a general idea of how much you're going to owe. So in order to do that, you really need to know for 2021, what were your total business revenue and what was your total business expenses, because you're going to owe taxes on the difference. So if you did $500,000 in revenue this year and all of your business expenses were $400,000, that means that your net was $100,000. In its most simplistic terms, think of that $100,000 as your gross income back when you were an employee. So as we know, we owe tax on our gross paycheck, right? So your business's net income, AKA your business's profit, AKA your business's revenue minus expenses, all right? That is the amount that you are going to owe taxes on. Now, what I generally follow as a rule of thumb, and I want to be really clear, guys, okay? This video is for informational purposes. I am not looking at your financial statements, okay? So don't take this as tax advice. This is meant to be educational. I strongly advise you to meet with your accounting professional. And if you don't have one, shameless plug here, call me. We are taking on more clients. But you need to meet with them and really find out what your taxable income is going to be this year. But again, in its simplistic terms, it's going to be your business's revenue minus your business expenses results in your taxable income. Now, the way that you are taxed, and we'll be doing a lot more videos over the next couple of weeks, really breaking it down. You're going to be taxed federally, and you guys can literally just Google 2021 federal tax rates, right? And you will see the bracket in which you fall. And then you're going to be taxed at the state level. Some of you might live, there's a handful of states that don't have income tax. So maybe you live in one of those states. But I'm sure you would know if you lived in that state. But if you don't, then you're going to have at the IRS level and at the state level. Again, very generic rule of thumb. I say anticipate about 30%, but please speak to your tax professional to get your number. But as a rule of thumb, I say that you're going to take your business revenue minus your business expenses. That's going to result in your business's profit. And we're going to guesstimate that about 30% of that is going to be owed to taxes in a combination of the federal government and your state and local governments. All right. So that's how you're going to figure out this very rough calculation as to how much you're going to owe in taxes. Here is where I need you guys to really listen to me, because I see this year after year after year. So let's just say you walk through this exercise and you say, I'm going to owe $10,000 in taxes. All right. please do not go out and buy $10,000 worth of shit because you are under the incorrect assumption that that $10,000 is now a write-off and you have therefore eliminated your tax bill. That is not how this works. And I know you guys think it works this way because number one, you tell me. And number two, remember my backstory, okay? I did not study accounting in school. I learned this in the trenches taking grenades. I'm an entrepreneur like you. I used to have 2 failing restaurants. I thought this. So I know y'all are thinking this, okay? When I was told you owe X amount of dollars in taxes, I was like, great, there's a bonus. I'll go buy a new computer. That was in my head how I would handle it because I remember specifically thinking, I'm going to pay myself instead of paying Uncle Sam. So I'm going to go treat myself. Well, guess what? Let's say you owe $10,000 and your solution is I'm going to go out and buy a bunch of stuff, right? So maybe you go out and maybe you go out and buy a car, all right? And you just put $10,000 down on the car. And now you think, great, now I just added a $10,000 expense. Now I don't owe anything in taxes. It doesn't work that way. All right. It's not a dollar for dollar exchange. You might also be making these large purchases, which are going to be an asset, which is going to have to be depreciated, which is definitely a live training for a different day. But if you hear anything, I want you to hear that it's not going to be a dollar for dollar exchange. So if you owe about $10,000 in taxes, please don't go out and just purchase $10,000 worth of shit thinking that you've now eliminated your tax bill, okay? Instead, I do want you to look around your business and say, all right, what are some things that I need, that I do want to invest in, and now is, the best time to invest in it, right? So maybe you are in a place where you really want to give your team bonuses, right? Go ahead and pay out the bonuses. Those are going to go run through payroll, okay? It's not like you just write them a random check, pay your employees correctly. But if there's little things that you want to say, oh, I want to spend this now, I want to do this, but I want to be clear about how it works. When we get these deductions, these write-offs, okay, people seem to think I owe $1,000 in taxes, I'll spend $1,000 worth of stuff, I just eliminate my taxes. That's not how it works. Whatever you purchase that is going to be that business expense, essentially what you actually saved, okay, was your tax rate, which I said, anywhere between a 20 and 30%. So whatever these purchases are that you're making, all you did was lower your taxable income, right? So it's not a dollar for dollar exchange. We're not reducing that tax bill dollar for dollar. Instead, the best way to think about it is you are getting a discount on whatever you purchased, and that discount is determined by whatever your tax rate is, right? Which again, I strongly advise you to speak to your accounting professional and figure that out. So let's just say it's 30%, right? So what's happening is, let's say you go out and, I don't know, you spend $500 at Staples and you needed ink and whatever it is. And you're thinking, great, I just reduced my tax bill by $500. No, you didn't. Essentially, you got 30% of $500 reduced, but you reduced your cash reserves by $500 and you still have a big ass tax bill. And that's why this can be so incredibly dangerous, because people find out that they owe a lot in taxes. So then they go out and spend a lot, and it's not that dollar for dollar exchange. And all you've really done is minimally reduced your tax bill, but drastically reduced your cash reserves, which is detrimental to you having the ability to pay that large tax bill. So I'm sure you guys can tell I get really passionate about this because I want to shout it from the rooftops because I just know you don't know this stuff. I did not know this. I was like, oh, I got a tax bill. I look at that as a bonus. I'm going to go out and spend that money. And now I don't owe it. And instead, I was out the cash and I still had the tax bill. It was just minimally reduced. So it's a really great way to get yourself in trouble. So point number one, don't go out and buy a bunch of shit thinking you're going to wipe out your tax bill. Doesn't work like that. It's not going to be a dollar for dollar exchange. So that's what I don't want you to do. The other thing that I don't want you to do is to continually sit down and strategize how to get rid of your taxes. Okay. There is so much emphasis and brain power being wasted in the entrepreneurial community, thinking and pondering, how can I get out of paying my taxes? Girl, put that brain power into figuring out how to be as profitable as possible. Everything should revolve around having a profitable business. We got in business to make money. We did not get in business to commit tax evasion. Okay. I want you to be as profitable as possible. Remember, your profit is essentially the same as your gross paycheck when you are an employee. So here is a serious question I want to ask you. When you were an employee, when you were in the workforce, if you got offered a job that was $100,000 a year, okay, and you got offered a job that was $200,000 a year, would you turn down that $200,000 a year job, that higher paying job, just because it means you would owe more taxes? Makes no sense, right? I hope that was legit a mic drop moment for you, because you would never do that. You would never say, I'm not going to take the higher paying job just because it means I'm going to pay less in taxes. You'll say, I'll take the higher paying job and just pay more in taxes. Well, in our businesses, when we try to evade taxes, when we try to get out of paying them, we are essentially doing everything we can to give ourselves a lower gross paycheck. There's no logic there. So I want you to stop looking at it. And I want you to say to yourself, instead of me thinking about how can I finagle this tax bill, think about how can I be as profitable as possible, and remind yourself that you would not have turned down a higher paying job because that meant more taxes. So you should not be turning down a more profitable business just because it means more taxes. Okay. So we talked a lot now at this point about what not to do. Let's talk about what you should do. Okay. My absolute favorite way to, and I don't want to call it tax evasion, okay, because it's not what it is, to tax shelter, okay, and it is perfectly legal. And I said this earlier, you know, when I was an entrepreneur, I was saying, I want to pay myself. I'd rather pay myself than pay Uncle Sam. Well, the legal and best way to do that is to invest into your retirement accounts. Okay. Now, this training is not about that, but there are a lot of resources, and I've got a lot of stuff planned for you guys for next year to really talk about it more. But the high level point that you need to know is, if you are in a situation where you got a large tax bill, please, 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 rather than running out and swiping your credit card for a bunch of pointless things and ending up with, 50 pounds of ink for your printer because you just needed to spend money to get these deductions, please speak to an accounting professional about the types of retirement accounts that make sense for you that you can invest in. Guys, this is hands down the best way to mitigate your tax bill, okay? The IRS, the government, they want you to save for retirement. Why is that? Because it saves them money, right? They don't want all of these older people having to be on government assistance programs, right? They want and reward you for investing into your future, for saving for retirement. And there are a ton of tax sheltering options available to you. So before you go out and buy a bunch of shit, really look at what are my options when it comes to retirement. That is a tremendous way to legally reduce your tax bill. And you guys have heard me say this before. As entrepreneurs, we've always got to be looking ahead. We've always got to try to do that really difficult dance of I need to know exactly what the hell's going on today, but I got to be looking to the future and planning for tomorrow. And too often, because we get bogged down with the day to day. I mean, you guys know, one day you're a marketing director, one day you're actually in the field cleaning the toilets, one day you're a bookkeeper. We wear so many hats, right? You're head of HR, you're head of marketing, you're head of finance. And we get so caught up in that day to day that we forget to look ahead. We forget to make a plan for the future. So I feel really strongly about empowering entrepreneurs to know that you can create a financial plan for the future. I think a lot of people think you only get retirement and 401k, all those things if you are an employee, if you have a job. That's not the case. The programs for retirement for entrepreneurs are actually effing phenomenal. Okay. They're really great. They're not talked about enough. And it's definitely the absolute best way for you to be sheltering your money. Now, I do, of course, want you to take a look and say, okay, what are some things that I do need to purchase? I'll tell you guys right now, one of the things that I invested in this year that I purchased for the end of the year is I bought a teleprompter. It's going to help me when recording my courses so that I can have the script out. I can look directly at the camera. I'm super happy about it. And that was something that, I took a lot of time and research and did my due diligence and decided to invest in. So it's definitely the time of year to be looking at that and see what's going to be a good fit for you guys. If there's something that you really do need to spend. But again, I want to highlight the fact that it's not going to be that dollar for dollar exchange. You can essentially look at whatever you're purchasing as being reduced by your tax rate. So I hope that this video has, number one, reframed your mindset to say that taxes aren't bad, right? People who make money pay taxes. The government doesn't tax people who aren't making money. All right. So let's stop being broke on paper. All right. Focus on the profit. Don't focus on tax evasion. All right. But please explore these options that are there for you to mitigate the taxes because it is an investment in your future. And somebody said in the comments, look at IRAs and HSAs. HSAs are, I actually didn't talk about that. That's a health savings. That is awesome to help with your tax bill. And IRA is just another form of retirement. I think I had mentioned 401k, but you can do an IRA. And I think, like I said, in the community, there's just a lot of this mindset. Well, I get a 401k from work. I'm a business owner, so I don't get that. You get it. Okay. You can get it. You can set up these retirement plans and they're wonderful programs. And I really hope that you guys look at that. And I hope that this live training was useful. I hope you learned some stuff from this. Over the next couple of weeks, we are going to be diving deep into everything we need to do to get you guys organized because the clock is ticking. We are going to have to file our taxes in the next couple months. And I really want to help you guys feel calm about it, feel informed, and feel like you can handle it and tackle it. So we will be doing a lot of share screen demos so you guys can kind of see behind the scenes what I'm doing in QuickBooks, what the process is to close your books. I believe that training is actually next week. I'm super excited about it. And stick around, and hopefully, we will all get through tax season with our sanity and making sure that we all just pay the taxes we legally owe. All right. I don't want to bring you guys these weird kind of loopholes that are a little bit kind of cheating the system. No, I want to inform you guys what you legally can deduct and the best ways to shelter your money so you don't pay a penny more than you owe. So hope this was helpful. Thank you for tuning in. Again, if you are on the replay, please drop it in the comments as it tremendously helps with our algorithm. Talk soon, guys.